Hey guys, what's up? My name is Matthew Spazzini and welcome back for another episode of the weekly market analysis video. If you guys are new here, first and foremost, welcome to the channel. Like I said, my name is Matthew Spazzini. I am an aspiring Forex trader trying to learn my way on how to trade Forex and to become a consistently profitable trader as well as becoming financially free. And if you guys are new, basically what these videos are is I have a TradingView profile, Matthew_Spazzini. If you haven't checked it out, please do so. Consider following if you like the content, where I actually post a lot of trading ideas. I have 71 ideas and 100 followers right now, which is pretty great. I'm not trying to gloat, but I am very, very happy. We just crossed into the 100 marker for the followers, which is awesome. And yeah, so what I do is I take my trend continuation strategy that I created, which is a very, very simple like pullback strategy. It's really not anything overly complicated about it. It delivers a lot of trading signals, and I come over here and I practice my trade analysis on live data by taking these trades and posting the content, and posting the content for you guys here on YouTube and posting the content for my followers on TradingView. So that being said, this is pretty cool. This is what I do. This is my journey to becoming a consistently profitable trader and to becoming financially free by controlling the source of my income. And that's largely what we do here. We talk a lot about Forex trading. I give lessons on different types of pattern recognition and all kinds of different stuff. Now, granted, I don't only talk about Forex, although that is the main topic, as you can see from my YouTube channel, that what we talk about. It's not the only thing that we talk about. We also talk about a whole host of other things. We're going to be talking about personal finances, investing, all kinds of different stuff, entrepreneurship in general. So like, how can you make money online and stuff like that? We're going to be talking about a lot of different types of stuff that's really going to be really quite good. We're not just going to only focus on the Forex market. We'll probably talk about the options market. That's actually where I got my start from. I started trading in the options market, which is a whole other beast, if I'm being completely honest. The options market is a whole different type of beast, but you can make a ton of money in the options market. I mean, if you're going to be trading stocks, at least for me, I wouldn't trade stocks directly. I would probably trade stocks with options because you can make a ton of money. Now, conversely, you can also lose a ton of money, so you don't want to be taking a lot of risk. But that being said, though, guys, we're going to be doing a whole bunch of stuff here. And the main reasons that you don't see me in my videos right now is I don't really have the best setup. I'm sharing my office with my wife currently, and my 8-month-old daughter, she's in a pack and play while me and my wife are working and stuff. So I don't have the best setup here. That's going to be changing in the future. You're going to be seeing a lot more of me. I'm going to try to put a more personal touch on the channel. What I'm going to do is I'm going to readjust the office, maybe get some pictures and stuff and kind of have a cool little background, and then I'm going to buy a really nice camera that I've been wanting to buy for a little while now, and it's going to be pretty cool, and I'm really, really excited about it. I hope you guys are too, because these videos are great. I think that they're packed full of content, valuable content, but in the end, I'm going to be completely honest with you guys. You guys don't get to see me. You don't get to see my face. You don't get to see me talk to you. So we're going to change that. You guys are going to get to see me. You're going to get to see me taking these trades. You're going to get to see me doing all this kind of stuff, and it's going to be great. Unfortunately, it means I'm not going to be able to be dressed in what I normally wear. What I normally wear is just a white t-shirt, an undershirt. Usually goes under like a button-up shirt or polo or something like that. But I love them. They're thin. They're comfortable. And then I wear basketball shorts. That's what I wear around the house. It's super comfortable. I love it. If I'm going to be on camera, I'm actually going to have to get dressed and at least look presentable and not be super, super comfortable. So that's going to be a little bit of a, I don't know, not a downside, but it's not going to be it's not going to be as comfortable as I was. And the other problem is the room I'm in doesn't have a fan. So another reason why I like to wear this is because I get very, very hot in here. My computer generates a lot of heat. I mean a lot of heat. If you guys listen very closely, you could probably hear the fan beating around there in my computer box and whatnot, my desktop and whatnot. So it's, I need to get a quieter fan. I have an AMD processor and it runs hot all the time, and it doesn't take much to get it to run hot. All you got to do is open up Google Chrome. It's a powerful computer, but in reality, I would like to update it over time, but yeah, it suits my needs for now. I'll probably gut it and update it again. I love building computers and stuff. I'm a big tech nerd. But that being said, let's jump into the trading, because that's why you're here. All right, so the first trading strategy that we got going on here is actually the pound New Zealand. Now, I haven't taken this trade because, as you can see, the market did not. Well, let me explain this first and foremost. If you're new, this is going to need some explanation. So for starters, the problem I'm having with this particular trading strategy is that, as you can see, technically the market already came in and hit my yellow line. My yellow line signifies when I get entered into the market. So in this case, this is a long trade. I want to go long. I'm hoping the market's going to hit my yellow line, my entry, and then rally from here all the way up to the highest body of the candlestick, which is up here, the highest point of the highest candlestick, which is 193.03, and that would be my target. That's what I'm hoping for. Now, before you say, okay, well, you got into the trade right here, right? No, unfortunately, I did not. You see, I actually didn't come into the markets, or at least I didn't get to this currency pair. As you can see, I start from the top of this, massive currency pair portfolio list, and I start from the Aussie CAD, and I go all the way down to the dollar yen. This is the dollar Chilean peso. I don't actually trade the Chilean peso. I was honestly just looking at it. And then, of course, you've got your silver, your gold, spot prices, and stuff of that nature. But for right here, by the time I got to the pound New Zealand, it was already 9 o'clock in the morning. Now, I probably came in somewhere around 8:30, ate my breakfast, or, something around those lines. So I actually didn't find this trade up until the dotted blue line, which was right here. Okay, that's what the dotted blue line means. If you see that, that is indicative of when I found the trade. And the solid blue line here indicates where the market was when I found it. Now, technically, the market was a little lower, but it constantly came up higher. So this is where it was when I found it, okay? And unfortunately, I may have missed out on this opportunity. If this red candlestick or if other candlesticks come down and hit this entry point, I'll actually get entered into the trade. But up until right now, I'm just kind of waiting to see what's going to happen. I may have missed out on this opportunity because I came into the market late. But the reason I wanted to show you this is, even though this isn't a trade that I have yet taken, although we are getting closer and closer to my entry, the reason I wanted to show it to you is because I want you to know that, look, life isn't perfect. And when you start getting into trading, don't be upset when you get in and you miss out an opportunity, right? Put your entry on anyways, or at least put a price alert on anyways, and see if the market will give you a second chance. It happens to me all the time. I'll miss an opportunity, the first test of the opportunity, and then I'll put my entry on and I'll get a second chance, a second whack at it. Now, sometimes it's not a good thing, and I didn't want the second whack because it ended up losing me money. But, you never really know that up until you take the trade. So, that being said, let's go ahead and talk about the actual trades that we have going on today. We've got the pound CAD. The pound CAD was a very, very good trade. This was my favorite one so far of this week. We only actually had 2 trades, pound CAD and CAD Swiss. So, unfortunately, we didn't have a lot. And, sometimes just certain weeks are like that. Now, I'll be honest, last couple weeks, I had like 5 or 6 trades. It was really, really great. We've had tons of trades last couple weeks. But this one, unfortunately, we don't have a lot. We got 2. And a lot of that's because the market direction just didn't work out. I placed my entry. What I like to do, I'll actually show you guys what I like to do here. Let me find one. Right here. So this is something I like to do. I will actually look at the markets right here. I will see, okay, here we are. We're all the way up here. And I'm going to do my fib. I do my fib measurement tool, retracement tool from the swing low, which this is actually not in the correct position. Let's move this up a bit. There we go. I will draw my fib retracement tool from the swing low here to the swing high all the way up here, and I will put my entry right on the 618 fib retracement price level. Okay, and this is how I usually take my trades. I am constantly planning for the market to roll over hit my target, and then continue on in its trade. Now, this is a pretty deep retracement. 618 is a very deep retracement, particularly if I'm measuring from this point. You can see that we've had this big tear up here, and we may never, ever get down here. But this is how I catch trades. This is, trading is a lot like fishing, right? And you're increasing your chances every time you get a new rod out there, and you just let the rod sit out there with bait on, and you just kind of, sit waiting for one of your rods to get hit. If you're into fishing, you know what I'm talking about. Now, when it comes to this, every single time I do this, it's like placing a rod out there. I got one rod, I got a line out, and I'm waiting to see if I'm going to get a bite. And, if the market comes down, hits my entry, that's the bite, and I caught something. Now it's a matter of whether it gets away and stops me out, or whether I catch it and I get to have fish dinner, or whether it's a catch and release thing, whatever. I get to take a picture saying, hey, look at this big fish I caught, whatever type of thing. That said, that's very, very symbolic of what trading really is. So every single time I do this, I'm putting a feeler out there saying, hey, if the market gets down to this point at any given point in time, I want to get involved. And then if that happens, I'll place a target up here and a stop loss 10 pips below the low. And that's how it works. That's how I catch the majority of the trades that I get involved in. So a lot of times what happens is that the market actually continues higher and I don't actually get involved. And that's actually what happened with the majority of trading opportunities I had this week. The pound CAD and the dollar and the CAD Swiss were the only trades that I actually was able to get involved in. So as unfortunate as that is, it is what it is. And we're going to just move on from there. So here we are, pound CAD. I took my fib retracement tool and I measured from this swing low to this swing high up here. I got a 618 fib retracement at the 170.02 price level. So that's where I placed my entry. And then I waited for the market to come down, and the market did. The market came down, got me involved, and now I placed my stop loss 10 pips below the low. So we were sitting at the low is 1.6875, and we're 1.68. Let's see here. Did I say 75? So we're at 65. Actually, it's saying 66. So I probably measured it wrong when I just showed you. Sometimes it's hard to actually get the exact measurement. I can get one measurement one day where it's 68.76, and then the next day I measure, and for whatever reason, the way the charts are, split or whatnot, or the way that they're stretch out, sometimes I can't find the ones, that same price. Oh, here we go, right there. This is 68.76. So you see, a lot of times if I stretch the chart out, I can find that price level a lot easier. If I don't, then price will jump from 69.25 to 69.265 or something like that. And I'm referring to the actual gray boxes over here where it actually shows you the price level that my crosshairs are on, okay? Now, that's getting boring, but you kind of, hopefully you get the idea of why sometimes the measurement wasn't exactly the same, but once you stretch the chart out, you can find it. That said, for the target, I always place the target. I'm going to show you guys this real quick. This is very interesting. I always place the target up here at the entry, at the highest point of the highest body of the candlestick. Okay, because we're bullish, I want the highest candlestick, the candlestick that went the highest, and I wanted to put it on the highest point of the body of the candlestick, not the wicks. And the main reason for that is I could put it up here at the wicks and capture more profits, but I've had many trades where I would have missed out entirely on the trade because the market came all the way up here, right to where the candlestick body was, and then fell, and then ended up stopping me out. So in this particular situation, actually, from now on, what I do is I place my entry at the highest body of the candlestick on the highest candlestick, which is right here in this case. Now, I know, like I said, I don't capture as many pips, but, honestly, the amount of pips you're giving up most of the time is not that much to really matter one way or the other. So that's why I do that. That's why I don't put it quite at the high. I used to put it at the highest point the market had ever gone with regards to the trading pattern that we're looking at. So I would always put it at the highest wick. But I got tired of getting stopped out when I could have made money if I had placed it on the highest candlestick and the highest body of that candlestick. So that being said, though, the market came down, hit my entry, made me think we were going to get stopped out here for a little while, and then is now rallying. Now, there's no guarantee that this is going to continue higher. This could just consolidate sideways and go down, and I could still get stopped out. So far, though, the market appears to be going in the direction of the target. It appears to be bullish still. So we'll just kind of have to wait and see what happens. If it breaks above this particular price level, then I think that there is that means that it not only broke above its consolidation right here, it also broke above here. It's currently hitting a resistance level right now. So the resistance level is right here. There we are. That's your resistance level, and it is currently hitting that. Once it hits it and breaks above, that resistance will turn to support, and hopefully it will bounce off and rally. That's the general idea. That's the general concept. So yeah, I mean, pretty simple trade for the most part. I'm hoping that it'll make me money because we've been taking a lot of losses in this strategy. Now, for those of you guys who are also just joining me, this is an unback-tested strategy. It's important you keep that in mind. I have not back-tested this over historical data on every single currency pair. I have back-tested over the Aussie CAD, the Aussie USD, and the CAD Swiss, and the Euro Yen. And it has a positive expectancy on the CAD Swiss, the Aussie USD, and the Aussie CAD. It does not have a positive expectancy on the Euro Yen. So it's really, really, really important that you keep that in mind, that while I have back-tested it over 4 different currency pairs, I mean, my currency pair portfolio is much larger than 4, so the one we're on, the Pound CAD, I haven't back-tested it on, so I have no idea how consistent this strategy really is with regards to this particular currency pair. So we're just going to have to kind of wait and see what happens with that. The next one is the CAD Swiss. Let's go up here. All right. Oh, that's right. I was like, where is it? Okay. I was about to say. All right, so this is what actually happened here. So I originally drew my fib retracement tool from this swing high to this swing low, because I figured because the market broke below this structure level, it was going to rally the 618 fib retracement level, like so. Let's see if I can get it right on. It's not as important if I don't. Okay, perfect. And then it was going, and I was under the assumption that if it did that, then the market would continue to, fall and roll over, and I would end up making money, and it would continue the trend, which is why we've named this the trend continuation strategy. That said, though, that's not what happened. Let me go ahead and put the target right here and the stop loss 10 pips above the high right here. So 69.58.3, we're looking at 69.68.3. Let's find that, or at least something close to it. Sometimes we can't find the exact 69.68.2. That's close enough. And then we'll go ahead and place our entry tool here. This is our long position. Tells us our risk-reward ratio. It highlights with really cool red and green. All right, and as you can see, we totally just got stopped out right away. And that's basically what happened with this trade. So I placed this trade on. I wasn't even watching it when it actually happened. I just placed it, placed my target, my stop loss, and then I just let it sit there and wait to see what if I get an answer. And my answer was that no, I was wrong with the analysis. Now the market broke above, closed above, put in a double top, and is now retracing, and it's looking like it's going to continue to go higher, which is, not really all that uncommon. I mean, if you really think about it, the market's been on a bullish tear right here for quite some time, literally since March 18th of this year, and is now kind of going sideways, closed a little below, which led me to think that we were going to continue lower, but now we're going higher. So definitely an indication that the market probably intends to continue higher, just like that. Probably not just like that. It's probably going to go, do a whole bunch of squiggly lines like this all the way up there, stair-stepping its way up. But that was what happened. Sometimes it works out that way. Now, one thing I want you to notice is that when I posted this trade, even though it was a loser, I decided to post it anyways. The main reason is it's important for you guys to see the winners as well as the losers. And, you know, if this happens where it actually hits my target before I get a chance to post it, I'll show that just as well. But yeah, so that's kind of it, really. I mean, you know, that's there you go. That is the trades that I have for the week. You know, yeah, I wish there was more. I feel like it's been really, really short. I have a lot of different trades out there right now that we're kind of waiting for. I mean, you got the Aussie USD, you got the CADCHF. No, actually, it's kind of inside consolidation, so I'm not taking that yet. We got the CAD yen. Now, what's actually happening here on the CAD yen is very interesting, although the chart is not loading. There we go. We actually have an ascending triangle. This is actually pretty cool. The market came all the way down, came up, got rejected, came down again, but not as low as the first time. Came up again, got rejected. Tried to bounce up, got rejected again. Came down, came down low, but again higher than the last. And then came down low and higher than the last, and then higher than the last, and now it's coming up here and testing again. So it'll be very interesting to see what actually happens with this particular pattern. I don't take ascending triangles, which is what this is. It is an ascending. It's constantly going higher and higher and higher. At least that's what I think this is going on. This is happening because we got a straight line here, and we've got this constantly, you know, this market's, it looks like it's a bouncy ball, but upside down. If you were to flip this, then you would have a straight line like so, a straight line here, and you have a market that's going down here, and then coming back up here, but not as high, and then coming down again. You know, I mean, it looks almost exactly like a ball that is bouncing and losing its momentum and whatnot. And I mean, you can definitely see that it's losing momentum, and ultimately it's just constantly bouncing between two different points. It's losing steam is kind of what we're getting at right here. And this is what I'm drawing right here for you is a descending triangle. That's what this is. This is called a descending triangle, and this is a bearish, generally speaking, it is a bearish pattern. So, but that said, guys, I mean, we're not giving lessons on, you know, ascending triangles, descending triangles. We're just trying to show you guys that there is a ascending triangle going on right now, and it'll be very interesting to see what happens. If I was going to trade this strategy, I would look for the market to be, this is a bullish signal, so I would look for the market to be bullish. You know, honestly, I haven't really given it a whole lot of thought of where I'd place my entries, my stops, my targets. I really don't know. I guess I would probably try to, you know, enter down here. If we got down here again, I would probably try to enter down here, or try to enter one of these. Maybe I would use my 618 fib retracement tool again. You know, right here, we broke above this structure level, although we didn't really break above this structure level. Yeah, I'm not really sure. I'll be honest, I don't really know 100% how I would handle this trade. I don't know, but anyways, I thought it was an interesting trade idea to let you guys be aware of. But that being said, though, guys, this is generally what I do. You know, we come into the markets, I look for trades, and then I see whether or not there are any opportunities in the markets for me to take. This is how I would actually trade if I was going to trade live, which, you know, once I'm done with my back testing, I will. Which is why I call myself an aspiring Forex trader. So that being said, guys, you know, one thing you need to keep in mind when you're doing all this is that it's a lot of work. It's not easy. It takes a long time to do all the necessary work. And even then, you don't have any guarantees here. You're doing a massive amount of work with no guarantees, and I know that sounds depressing, and I know that doesn't sound like something anybody really wants to engage in, but in reality, that's just the truth. I really have no idea if I'm going to be a consistently profitable trader. I believe that I am going to be, but I don't know for sure. I'm doing all the necessary work. I've created a trading plan. I'm backtesting that trading plan. You know, I'm going... And, you know, I'm doing all the necessary work, all the work that I was told to do and taught to do by my mentors, and I'm trying to get out there and see what happens. And guys, that is what trading is all about. It's skill. It's like becoming a professional basketball player, right? You don't just take a few shots and hope that you end up making, going pro and hope that you're going to become successful. No, you're like Michael Jordan. You go out there, you take shot after shot after shot. You're practicing, you do hundreds of shots, and you get really, really good. You're training your brain and you're training your muscles to ultimately become a professional at what you do, to be very, very good. And in order to be excellent, you got to master the basics, okay? Mastering the basics is one of the most important things that you can possibly do. So some of the basics when trading, learn how to read a price chart. That would be a basic skill that you need in order to become a consistently profitable trader. How can you predict or even attempt to predict, the direction, price movements and the direction of the market when you don't even know how to read a price chart? So in order to do that, you need to know and learn how to read a price chart. You need to learn about when is the market trending, when is it consolidating, when is it bullish, when is it bearish. If the market does X, Y, and Z, that means that the market's has a high probability of doing this. And there are no guarantees, right? But this is what is required in order to be a good trader. This is why I'm doing what I'm doing. I'm just practicing chart analysis. I'm going into my charts. I'm every single week. I'm taking trades, hypothetical trades. I'm looking at trades. I'm trying to predict market movement. I get caught in all kinds of. I'll show you guys this trade right here. This is the dollar CAD. I got caught in the whips. I call this the whipsaw. Basically, it's just sideways consolidation. I got caught in this for a long time before it finally put me out of my misery. This trade I entered on June 30th, and I didn't get filled or get an answer as to whether or not it was going to stop me out or hit my target until like July 21st. That's only 9 days off from this being a whole month away. This was a little over 3 weeks worth of waiting. And then it was painful. As you can see here, we just consolidated, we broke below, which was a high indication that once the market breaks below, it's going to continue to head lower. But here, look at what we had. We broke above, we had a false breakout, and then we continued lower. This is what trading is. So you got to learn to handle these kind of painful trades. You've got to learn how to handle crazy market activity, and in the end, if you want to be a consistently profitable trader, you need to learn the basics. Sideways action like that is called consolidation. Action that doesn't appear to have much of a direction is consolidation. Okay? It's really, really important to keep this in mind, guys. If you want to become a consistently profitable trader, you need to master the basics. The basics, again, learn how to recognize the price chart. We've got videos on that, on the channel. You need to learn about Fibonacci measurements. You need to learn about trend continuation and how to recognize harmonic movements in the market. There's a whole bunch of really basic stuff that you guys can get. But I would say the most important thing is learn how to learn how to read a price chart, learn how to create a trading plan, learn how to backtest that trading plan, and go from there. I'd say those are the top 3 things that you would need to know in order to become a consistently profitable trader. You need those things. You got to know how to read a price chart. You've got to know how to create a trading strategy. You've got to know how to test that trading strategy to see whether or not it's profitable. This is what you need to do if you're interested in becoming a consistently profitable trader. All right? And it's hard work. It takes a long time. Learning how to read a price chart doesn't really take that long of a time. But once you learn that type of stuff, then you will learn how to predict market movement. Obviously with some form of consistency. It's all about probabilities, right? You're never going to be 100% right. But you'll learn how to predict market movements. You'll learn how to identify market movements. And that's what you need to do. I mean, before you even get into pattern recognition or anything of the sort, learning how to read a price chart and then practicing your charting analysis is incredibly important. Trying to determine market direction, trying to determine what market's going to do, learning to identify support and resistance levels, learning to read and analyze structure. This is all part of learning how to read a price chart, which is why I just say overall, learn how to read a price chart instead of all this other stuff. There's a lot of stuff that's in there. But this is what you got to do to become a consistently profitable trader. And it's a lot of work. And unfortunately, there is a lot of, I call it the trading media, right? Mass trading media. It's kind of like a mass media, but mass trading media. And they're always out there teaching you how you can, make money on the beach, make millions of dollars, trade the markets, yada, yada, all that stuff, right? But in reality, guys, it's really hard. It's not easy. It's certainly not as easy as they make it seem like it is. You don't go into a basketball game, get a few shots and say, okay, I'm going to go pro. But a lot of people, because of the trading media, a lot of people do that. A lot of people think, oh, I won a few trades, or I've been winning a few trades for a couple months now, I'm going to go pro. I don't need to do all the other stuff that Matthew says he needs to do. It's like, well, okay, fine. But eventually, you're going to lose. Eventually, you don't know. You might just be on a winning streak right now. Every strategy, a broken clock is right twice a day, right? So it's not uncommon to create a trading strategy, to go start trading and to start winning a few trades, which leads you to what's called the winner's curse. The more you win, the more arrogant you get, the more leverage you become. You put more money on the bet, more and more money, and before you know it, you blow up. This actually happened with a friend of mine. I can tell you guys this story, and then we'll go ahead and close out this video. I want to try to keep these videos relatively short, and they've been really long recently, like all the way into the hour-long range, and I would like to keep them in the 30-minute range. So we're at 32 minutes. Let's go ahead and I'm going to go ahead and tell the story, and we'll go from there. But guys, look, I had a friend who got me into trading. He got me into options trading, and I was learning options, and he was learning options. He bought a course that was really, really expensive, and I thought that he spent way too much money. And I figured, hey, how much can I learn for free? I eventually had to take a course, but mine was significantly cheaper than his. Well, the course that he took didn't teach him to backtest a strategy. The course that he took taught him a strategy, taught him the golden rules of the strategy, and then taught him you have to stick with this strategy. And he traded it without backtesting it. And to his credit, he grew his account to I think $30,000. I don't know how much money he started with, but he grew his account to like 30 grand. But then after that, he suffered a massive loss. You see, how he got to $30,000 so quickly was he was over leveraging himself. He was trading the options market, and he got a lot of different options going. He had a lot of option contracts for a particular stock, and the stock tanked. He never should have been taking that kind of risk, but you see, he didn't backtest the strategy. He didn't know the consistency of it all. He didn't know how to manage his risk. He bought a course, and someone taught him a strategy, and that was it. He didn't know that you need to manage your risk. He didn't follow the rules of his strategy first and foremost, because he didn't have any belief in those rules. You need to have a belief, and that's why we do backtesting. That's why we do backtesting. That's why we do forward testing. Yes, backtesting and forward testing are fraught with issues. They're not perfect ways of testing. You have confirmation bias. If you know the actual price, let's say you're trying to backtest Apple, Apple's sitting at whatever let's assume it's $300 a share, whatever, and you're going to go scroll back to where it was only $150 a share. Well, guess what? You know where it's going, right? That's confirmation bias. Now you're going to constantly take long positions all the time, and that's going to, influence your trading. Whereas if you didn't know the price, if the market took a dive and were not aware of this happening, which actually this happened. I actually backtested a trading strategy on Apple, and I actually had a lot of these problems. And I pushed the markets all the way to the back. Well, anyways, they have issues, right? But they're the best ways to test a strategy. They're the only ways that we have to test a strategy. Now, you can automate it. That's fine. Automation's not bad. Automation's very, very good. Here's the problem with it. It doesn't build up your psychological belief in the strategy. Okay? And my friend didn't do this. He didn't backtest. He built up his psychological belief in this strategy. So he continued to trade. He continued to over leverage himself. He didn't borrow money, but he placed way too high of a position, too much of a position on one trade, and it went south. And now his account, I think, is sitting at like $1,000. Guys, learn how to trade the markets. Don't just learn a strategy. Take it seriously. You could seriously end up losing a lot of money in this if you don't. Back test your strategy. Learn how to read a price chart first and foremost, and then create a strategy, a trading plan, and then back test it. Okay? Record every single trade you take in a trading journal, so that you have a lot of data that you can pull from, statistical data, and go from there. That's how you become a consistently profitable trader, is you master the basics. You build your belief system. You learn how to trade. You learn how to read a price chart. You learn the fundamental skills of being a trader. And then you create a strategy, backtest that strategy, and you learn the foundations of trading. That's what you have to do if you want to become a consistently profitable trader. And by doing all of that, you will build your belief and confidence in your systems that you create, your trading plans that you create, and it'll be great. Look, I'm on the journey, and I want to invite you on that same journey. If you guys are interested in this, join me. Like the video, subscribe to the channel. And hey, if you want, don't forget to check out my profile at TradingView, Matthew_Spazzi. I'll put the link in the description for you below. And hey, that said, guys, if you like what I'm doing here, please share the content. Invite others to join me on my journey. Bring other new traders that are interested in trading and want to learn more here, because this is where you're going to learn a lot of the basics. You're going to learn about the realities of trading. You're going to see the truth, not what people want you to see, the candy-coated version, so that they can sell you a course. I don't have a course to sell you right now. I don't have anything that I'm teaching, that I'm selling you. I'm not going to do that until I become a consistently profitable trader, and then I will teach you how I did it. I'll teach you all the other stuff that you can't really see because it would be really boring to see it, right? I'll show you everything. But here, my promise to you is I will be transparent. And I will teach you, I will show you what I'm doing, what is working, what isn't working, the struggles and all that kind of stuff. So that sounds interesting to you guys. Hey, like I said, like the video, subscribe to the channel, and don't forget to check out my profile at Matthew Spazzi, Matthew_Spazzi at TradingView. All right, guys. Hey, hope you guys enjoyed the video. If you did, make sure to share the content. I'll see you guys in the next one. As always, know the risks, plan accordingly, and have a great day.